I want to see how many of you can correctly answer this question. Why did all the gold and silver investors fall asleep at the bond and debt convention 30 minutes later? Because there's little or no interest. Listen, if y'all don't start laughing at my jokes, I'm going to go back to my breakdancing career. Okay, while that joke may not accomplish its goal, let me tell you who did. Me. You might notice something a little different on your screen, and that's a sash I received because your boy, Dr. Stacker, finally made it official and completed my PhD last week. I'm officially a doctor, and I think Snoop Dogg said it best.
Last but not least, I want to thank me. I want to thank me for believing in me. I want to thank me for doing all this hard work. I want to thank me for having no days off.
Dude, it's Dr. Dre.
All jokes aside, besides my direct family and loved ones, I want to especially shout out my boys over on Discord and thank them specifically for being patient with me over the last year or so. I haven't been as involved because I've been writing my dissertation, but I want you to know that Doc Stacker is back and I have some big plans for us in 2025. If you haven't joined, get yourself over there ASAP because we're going to take it to the next level next year. What is good, Stackers University? It's so good to have you here with me today. And as we talk about how I received 30 free ounces of silver over the last 3 months. No joke. But before I explain how, it's more important that I explain why. As gold and silver investors, we've all heard the famous critique from Warren Buffett that gold and silver are like pet rocks. And yes, while a 1924 gold coin is the same gold coin in 2024, it definitely buys what it did back in 1924 and then some more. Most of the time, people talk about Buffett's comment and they interpret it as he's anti-metals. I actually don't believe this is the truth. As a manager of other people's money, he has a fiduciary responsibility, and telling your investor about how he's protecting their purchasing power in the long term with gold and silver would get him slaughtered. His fund, like most people, are obsessed with returns and yields, which makes physical metals particularly challenging. The challenge with physical metals is that they don't check all the boxes for the average investor, as they tend to evaluate an investment solely on how it makes money and how much money it makes. As a quick reminder, we have basically 4 ways that this is done. Appreciation, the increase in the value of the asset over time. Dividends, which are regular payments made by some companies, not all, just shareholders with excess profits. Interest, which is the return paid to an investor for use of the asset, typically from bonds and other debt instruments. And then rental income, which is generated from rental and leasing out real estate. And we basically use yield, total return, and compounding as ways of capturing or calculating this return on the asset. Why I'm making such a big deal about this is really simple. If you just believe what the mainstream pundits say and want you to believe, it's a lot harder to win at this game of money. We spent the last few videos driving home and making some key points. One, that your wealth is measured in ounces because that's the only constant we really have. That is why we spent a whole video talking about home prices in terms of ounces to determine if housing is cheap or expensive. The bottom line is that dollars are simply a floating extraction designed to lose value over time. Number 2, to make it crystal clear, let me give you this example. $250,000 in 1972, in order to have that same purchasing power today, you would need $1.8 million. But let's do some quick math. If in 1972, you would have taken your $250,000 in cash, converted it into gold, you've gotten well over 5,000 ounces. But let's just call it 5,000 ounces. Break out your calculators and tell me how much 5,000 ounces of gold is worth at today's prices, and tell me what's done better. The third point, and don't be misled about stories of wonderful returns from the stock market. Investor brokers are quick to tell you that you can expect 10 to 20 to 15% return on your money from the stock market, but they don't tell you what that's really worth when it's in an appreciating dollar that has lost 98% of its purchasing power over time. By the way, do you know why they call them brokers? Because they're usually broker than you are. All right, some of y'all will get that joke later. All this brings me back to, with silver offering a 6% annualized return since 1972 and gold offering an 8% return, I keep finding myself raising the number of ounces I need for retirement compared to dollars. You can keep your 15% stock market return on a dollar that's at least deflating by half. Now, that doesn't change the fundamental challenge with gold and silver that allows Buffett to call it a pet rock. It's about yield. Historically, they just don't provide us with interest, dividends, or even a way to compound, at least until recently. The solution to this problem is exactly how I earned 30 ounces of silver for free this last quarter. Disclaimer, you have to do your own due diligence, and this is not an endorsement of any of the companies I mentioned. No one is paying me to say what I'm about to say, and I don't receive any benefits other than trying to help and educate you to the possibilities that are out there. With that out the way, this part of the conversation is going to be challenging for some of you, but we need to have a logical and adult conversation about our money. I think everyone watching this video has zero doubts about gold and silver are fantastic investments or asset. But the biggest challenge is the only way to grow your wealth is through ounces, which requires us to continually save our fiat dollar and buy what we can. That means our cash flow is our most limiting factor to growing our wealth as measured in ounces. This also means that our existing gold and silver basically hang out in a safe, storing all of its wealth potential, waiting for us to do something productive with it. While that's great and all, if you're like me, you need your assets working as hard as you do or as hard as I do to increase my wealth. 3 months ago, I did a couple of videos around my decision to ship off 1,000 ounces of silver to Monetary Metals to participate in their silver bond, which pays 12% interest every year for the next 3 years. And oh my God, did y'all have something to say about it? And I get it. It's been drilled in our head that if you don't hold it, you don't own it. Well, let me hip you to an important game of money lesson that I got from Myron Golden. He talks about this act of sharpening your mindset so that you can have a perspective that you didn't have before. And here's the beautiful quote here. Most people can't seize wealth, SEIZE, because they can't see wealth, SEE. The point is, wealth and wealth opportunities are typically what you see in your mind. It's not about what you see with your eyes, it's your mindset. Think about it. You can't see your money in your 401k. What you see are digits on a screen or on a printout, but you still believe it's there. You can't walk in the bank and see all of your money. You can't see all your shares in the company, but you believe it's there. Investing and making money is about your mind, and the end result is the wealth you accumulate. Your 401k, your bank account, and your stocks all have the same fundamental risk as me sending off 1,000 ounces of silver in order to earn 12% interest annually. If I told you that I had invested $30,000 in a corporate bond that was paying me 12% interest, more than half of you would likely be like, tell me more, and you'd be interested until I told you it required you to send your physical metals. That's totally fine if that's a no-go for you. It wasn't for me at first. But let's go over to my client portal and let me show you what's happened. As you can see here, at the time, my account had 1,030 ounces of silver. And that means not only did my silver appreciate in terms of the price from the time that I sent the metals in, my wealth as measured in ounces increased by 30 ounces in just 3 months. And in fiat dollars, that means I made about $1,000, which as you can see here on the screen, these 30 ounces is the interest I received from my quote unquote unproductive pet rock, as Warren Buffett would say. With a shift in mindset and approach, I just countered Buffett's assertion that if an ounce of gold is held to eternity, all you still have is an ounce of gold. No, Warren, a year from now, I will have 1,120 ounces of silver. And 3 years from now, I will have 1,360 ounces of silver. I will have grown my wealth by not doing anything at all, but allowing my silver to do work for me. Please don't perceive this as some kind of victory lap of sorts. You may not always agree with me, or you may not even like what I say, but I pride myself on the fact that I've always been transparent with you as my viewers when it comes to when I've been buying, sitting on the sidelines, what I've been buying, or even the mining stocks I own. I do my best to fully disclose. I try to be transparent because I've been like many of you. I've been in your position. I've been at that place where I was fearful of what I did with my hard-earned money, and I simply didn't believe in things until I saw them or saw someone else I trusted do it. Because when I saw them do it, I then believed I could do it as well. I want to inspire you to consider all the options available to you and not blindly follow the standard advice given to the masses. Or as I like to say it, it's what the wolves of Wall Street dressed up as sheep love to give us as advice. If you want to get what the masses get, do what they do. But there are other paths that can be taken. Yes, the 12% bond for Monetary Metals was only for accredited investors, so not all of you will qualify. But there are other options. Monetary Metals offers gold leases that pay 3 to 5%. You have UPMA that offers leases and they do a 0% buy and sell spread. Atlantic Gold and Silver offers something similar, so does Kilo Capital. There are companies like Money Metals that allow you to loan against your precious metal. Rick Rule's Battle Bank will offer that to you as well. My point is that it's something new and there are lots of options out there. The problem is no one ever tells you about this for a variety of reasons. Be it gatekeeping, they don't know, they don't understand the importance of it, or they don't share because it's not in their best interest to tell you. I'm not telling you to go ship your metals off in pursuit of yield. What I am saying is that we already know how exceptional gold and silver are as assets by themselves. But your ability to take a portion of your wealth, a portion of your stack, and grow that wealth in ounces annually is absolutely a financial game changer. And that just may make gold and silver one of the top 3 investments in the world. In the comment section, tell me what you think about the idea of earning a yield on your metals. What are your thoughts? Feel free to congratulate Dr. Stacker on finishing my PhD, or simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning.